Welcome to Talk Tickers. Today, we're digging into a real head-scratcher from Wall Street. On March 12th, Adobe dropped what looked like a fantastic first-quarter report. So why on earth did investors race to hit the sell button? Yeah, we're going to unpack that. So look, on the surface, everything seemed to be going great. I mean, Adobe beat their earnings numbers, they stuck to their full-year targets, and they were really talking up how well their AI products were doing. But even with all that good news, the stock just took an absolute nosedive in after-hours trading. So what is going on here? What's the real story behind this disconnect? And this slide right here, it just captures the whole paradox perfectly. On the one hand, you've got all the proof of some really strong execution. Revenue up 12%, earnings up 19%, and they're generating record cash flow. But on the other hand, you have the market's absolutely brutal verdict, a drop of almost 8% after the bell. This is what it looks like when a great quarter runs smack into a wall of skepticism. All right, first things first, let's just lay out the facts. When you strip everything else away and just look at the headline numbers, what Adobe delivered was, without a doubt, a positive quarter. The company really did beat what the analysts were expecting, on both revenue and earnings. They brought in $6.40 billion when the street was looking for $6.28 billion. And their earnings per share, that came in at $6.06, a good bit ahead of the $5.87 everyone was forecasting. To top it all off, their guidance for the next quarter was solid, right in line with what people were thinking. By pretty much every traditional measure, this was a clean beat. So with numbers like that, you'd probably expect management to sound pretty confident, and well, that is exactly what we got. On the earnings call, they painted this really optimistic picture, basically arguing that their huge bets on artificial intelligence are really starting to pay off in a big way. And here's the key quote. It came from CEO Shantanu Narayen. He pointed to what he called direct evidence of AI monetization. See, he wasn't just talking about people using the products, he was talking about annual recurring revenue, ARR, which is the absolute lifeblood for a software company. And he said their AI-specific products saw that revenue triple in just 1 year. I mean, that is a massive claim. And management came with the receipts to back that up. They pointed out that Firefly, their main generative AI tool, now has an ARR over $250 million. Think about that. Acrobat's AI Assistant, its ARR grew 3 times over. And their big enterprise products saw growth north of 30%. You know, these aren't just fuzzy engagement metrics. These are real dollars, real revenue numbers. And it's all supported by things like a 45% jump in generative credit use just in 1 quarter. That all suggests they're building a pretty strong foundation for future growth. But, and this is the big but, despite that super bullish story from the people running the company, investors decided to focus on a completely different set of worries. Now, to really get why, you need a little context. Just look at this chart. Even before this big earnings drop, Adobe was already lagging its peers in the software space, and badly. The stock was down almost 29% over the past year, while the bigger software index was only down about 4%. So that tells you there was this deep frustration with the stock that was already bubbling under the surface. So what were these specific things that just overshadowed all the good news? It really came down to 4 key issues. First, the bombshell, the announcement that their longtime CEO, Shantanu Narayen, is stepping down. That creates a ton of leadership uncertainty at a really critical moment. Second, there's the skepticism that AI is actually re-accelerating the total company's growth fast enough. Third, you've got these broader fears about smaller AI-native competitors coming for their crown. And finally, their traditional stock photo business seems to be declining faster than people thought. So, putting this all together, how does it factor into our analysis looking forward? Let's get to our official rating on the stock as we head into the next quarter. Okay, we're going to break our call down into 3 simple parts. First, what do we think happens next quarter? We fully expect Adobe to meet its guidance, but the number everyone is really going to be watching is net new ARR to see if that growth is for real. Second, how will the stock act? We're predicting it's going to stay pretty range-bound, sort of stuck between that solid execution and these huge investor questions. The market is definitely in a show-me mode. And that leads us to our final rating. We are initiating our coverage with a market perform rating. Look, the company is doing its job and executing well, but the stock just isn't likely to outperform its peers until 2 massive questions get answered. Who's going to be the next CEO, and can AI truly reignite that top-line growth? So let's wrap this all up. When you look back at this really paradoxical quarter for Adobe, what are the most important things to remember? It really all boils down to this conflict between the present and the future. First, you've got this battle between execution and expectation. Adobe is delivering solid results right now, but investors have even loftier expectations for what AI should be delivering tomorrow. Second, it's the promise of AI versus the reality of the ARR. Management sees the monetization happening, but the market wants to see it make a much bigger dent in the company's total growth rate. And finally, you've got this new wild card: leadership stability versus transition risk. And that just adds a whole new layer of uncertainty at pretty much the worst possible time. This is not financial advice.